Hi, and welcome to the Early Retirement Roadmap Podcast, the show where I help you prepare for and thrive in early retirement. So, how much you pay or save for health insurance you get through the Affordable Care Act, or ACA, often comes down to one magic number: your modified adjusted gross income, or MAGI for short. Get it right and you can slash your premiums, but miss the mark and you might lose thousands in subsidies, making your health insurance much more expensive. Let's simplify this together. In this podcast episode, I'll show you how to easily calculate MAGI for the ACA, and then go through an example of a couple that's retired early, and we'll talk about simple ways to keep MAGI in that sweet spot to get some great subsidies and potentially even cost-sharing reductions, especially if you're retired early. And I've also created a free Excel template you can download to calculate your own MAGI and apply what you learn in this podcast. There is a link to it in the description or show notes. Now, for Affordable Care Act subsidies, think of MAGI as your adjusted gross income, or AGI, plus just three types of income added back in. First, there's tax-exempt interest. This is interest that's not federally taxed, usually from municipal bonds or funds. For ACA, you add the whole amount back in. For example, $1,200 of municipal bond interest goes right on top of your AGI to get your MAGI. Second, there's non-taxable Social Security benefits. If you started collecting Social Security benefits, say at age 62, before you're on Medicare, so you're getting health insurance through the ACA, this is the part of your Social Security that isn't taxed and is added back into your AGI to calculate your MAGI. For example, say you received $20,000 total in Social Security benefits, but only $5,000 was taxed. You would need to add $15,000 on top of your AGI to calculate your MAGI. Now, $20,000 per year is above average when claiming Social Security at 62. The average is closer to $16,000, but it makes the math here easier to follow. Third, we add back any excluded foreign earned income. This won't apply to most, but this is any wages excluded from taxation thanks to the foreign earned income exclusion. For ACA, your full excluded amount counts. So if you excluded $30,000, you add $30,000 back on top of your AGI to get your MAGI. That's it. Just these three items that can be potentially added to your AGI to calculate your MAGI. So now that we know the three things that get added onto AGI to get MAGI, let's make sure we understand what makes up your adjusted gross income, or AGI. AGI consists of income from these various sources. First, there's income from work. Your hourly wages or salary if you're working for someone, or if you're self-employed, your self-employment profits after your expenses. Then there's any investment income. This consists of taxable interest you may have from savings accounts or CDs, for example, all dividends, and yes, even the qualified ones that get lower tax rates, and short and long-term capital gains. Then there's any retirement withdrawals if you're retired. This would be withdrawals from an IRA or 401k retirement accounts, for example. And if you've done any Roth conversions, that converted amount is counted towards your AGI. Then finally, there is any other income you may have earned, such as rental or royalty income as examples. Then, now that you have added up your income sources, you're not done yet. To get to your final AGI, there are some deductions you can make, which will lower your AGI and therefore also your MAGI. Often these are called above-the-line deductions or adjustments because they are subtracted from your total income before calculating your AGI. First, you can deduct any health savings accounts or HSA contributions, as long, of course, that you are currently on an HSA-eligible health insurance plan. Then there is deductible traditional IRA contributions if you're eligible to do that. And then also, if you're self-employed, you can deduct half of the self-employment tax. This is because if you're self-employed, you pay both the employer and employee parts of Social Security and Medicare taxes, so the IRS lets you deduct half of this tax from your income, which lowers your taxable income and your MAGI. And also, if you're self-employed, you can deduct SEP IRA or solo 401k contributions. Lastly, whose income counts to calculate your AGI and MAGI? Well, it's your tax household. It's you and your spouse if filing jointly, plus any dependents required to file a tax return because their income crosses the IRS threshold to file, which is specified in IRS Publication 501, and I've included a link to that in the description. All right, let's put all of this in action. We have Alex, age 60, and Jennifer, age 58. They are recent early retirees and are calculating their MAGI for when they apply for an ACA health plan. Let's add their estimated income step by step. They expect to have $4,500 in ordinary and qualified dividends, $300 in taxable interest from a savings account and CDs, $5,000 in realized long-term capital gains. They plan to do a $20K Roth conversion from a traditional IRA, and they will have $0 in above-the-line deductions. They do not have any tax-exempt interest, non-taxable Social Security since they are not old enough to collect Social Security, or excluded foreign income. Remember, these are the 3 items that get added into AGI to calculate MAGI. So if we add all these numbers together, their AGI equals 4,500 plus 300 plus 5K plus 20K equals 29,800. This is also their MAGI because we do not have any of the 3 items to add back in. For 2025, 100% federal poverty level, or FPL, for a 2-person family in the lower 48 is $21,150. 400% of FPL is $84,600. The ACA uses the last year's FPL to set subsidies for the next year. So for 2026, it will use 2025's federal poverty levels. Alex and Jennifer's MAGI of $29,800 is above 100% FPL, and in fact, it's at 141%. And because they're under 250% of FPL, they'll also qualify not only for great subsidies, but also for cost-sharing reductions as well on several plans. These cost-sharing reductions reduce deductibles, copays, coinsurance, and the out-of-pocket maximum. And really, these cost-sharing reductions are amazing when you can control your MAGI to be under 250% of FPL or more, and the best cost-sharing reductions are if you fall between 100 to 150% of FPL. In fact, I created an entire podcast talking about the amazing cost-sharing reductions and subsidies you get by managing MAGI, and I'll provide a link to it in the description or show notes. And to see this example that I went through visually, you may want to watch this same episode on my YouTube channel. Okay, so we just calculated in this example that Alex and Jennifer's MAGI is $29,800. Now you might be thinking, wait a second, how are Alex and Jordan living on just $29,800 a year in early retirement? Remember, MAGI is not the same as cash flow. Here's what's really happening. They sold higher cost basis shares in their taxable brokerage account. The cash from the sale covers living expenses, but only the gain portion shows up in MAGI. So to get that 5K in long-term capital gains in our example, they sold 75K in stock with a 70K basis. As such, they have 75K to spend, but only the 5K gain counts in MAGI. So while their MAGI is $29,800, their spending power is quite a bit higher. This is a core early retirement strategy. Control what counts as income while still having more to live on. Speaking of that, I have a whole podcast that I'll link to in the description and show notes that is devoted to controlling MAGI for ACA health insurance and how specifically a taxable brokerage account can be a real superhero in controlling MAGI. Speaking of that, one thing to keep in mind when you control MAGI for the ACA, you also don't want your MAGI to get too low. In states that haven't expanded Medicaid, like Texas, Florida, and Georgia, for example, adults under 100% of FPL usually fall into a coverage gap, meaning they don't qualify for ACA subsidies or Medicaid. If you're in one of these states, always plan to keep your MAGI above 100% FPL. If you're not in one of these states, then falling below 100% of FPL would qualify you for Medicaid coverage. Okay, so now that you know how to calculate your MAGI, then you can use Healthcare.gov's online estimator tool. I've put a link in the description or show notes for that too, and you can see the insurance plans available to you and the subsidy you will get based upon your MAGI. And if your MAGI is below 250% of FPL, don't forget to check out the silver plans because you'll also qualify for the amazing cost sharing reductions I mentioned earlier. And these are only available on the silver plans. To use the estimator, you simply enter your zip code, ages, and estimated annual MAGI to preview premiums and potentially cost sharing reductions. Remember, though, that the 2026 ACA plans typically show up starting November 1st, so before then, the tool will reflect this year, 2025. You may also be wondering, when I calculate my MAGI for the year for the ACA, I'm doing an estimate. So what if in reality it turns out I've over or underestimated MAGI? Well, at tax time, that's where IRS Form 8962 comes into play. When you file your taxes, this form is used to reconcile the MAGI you've estimated with your actual MAGI. You'll complete it using Form 1095A. It's posted in your marketplace account from mid-January to February 1st, typically, and mailed by mid-February. This form shows how much of a subsidy, also known as advanced premium tax credits or APTC, you received. And here's something a lot of people don't realize. When you estimate your MAGI for the year and submit that estimate to the ACA marketplace, it doesn't mean that you can't change your MAGI estimate as the year goes on. In fact, if you found that you've overestimated or underestimated your MAGI estimate as the year progresses, you can simply log into your marketplace account and update your MAGI estimate. The reason you'd want to do this is because if your MAGI estimate goes up, the system will then lower your monthly subsidy so you don't get stuck with a surprise payback at tax time. And if your MAGI estimate goes down, there's an advantage too because you may qualify for higher subsidies or even stronger cost sharing reductions, and you'll start seeing those savings right away, which is super nice. I personally have done this as I'm on an ACA plan. What I personally have done is check my MAGI once per quarter and then updated the ACA if my MAGI has changed. And one more heads up about managing MAGI and how this is likely going to be critical to monitor if you're on an ACA health plan in 2026. Right now in 2025, we're still enjoying the expanded subsidies that were created during the pandemic and extended through the end of this year. But unless Congress acts, and so far they haven't, those enhanced subsidies are set to expire at the end of this year, 2025. In fact, I've created a whole podcast episode on this that I'll also link to in the description or show notes. What this means is starting in 2026, the old 400% FPL cap comes back. If your household MAGI ends up even $1 over 400% of FPL, you won't just lose all premium subsidies for the year. You'll also have to pay back any subsidies you already received when you file your taxes, which would not be fun. So if you plan to be on an ACA plan in 2026, assuming the enhanced subsidies are going to expire at the end of this year, as it's not looking like Congress is going to extend them, it's going to be critical to monitor your MAGI throughout the year in 2026. Think of it as keeping your foot on the scale, making sure you stay within the band you're targeting so you don't risk losing thousands of dollars in subsidies. All right, so we've talked about a lot of things so far. I want to end with some smart MAGI management tips for early retirees. Now, you've got a few levers you can pull. Of course, if some of your retirement funding is from cash savings, maybe because the market is down and you're avoiding sequence of returns risk by pulling from a cash type of account like a high yield savings account, that money has no impact to MAGI. When you need to sell some investments to fund your retirement, focus on the lots where there's little or no gain. Basically, where the price you paid, your basis is close to what you're selling it for. That way, you get the cash without creating a lot of taxable income. You can also use tax loss harvesting, selling investments at a loss to offset gains. If your losses exceed your gains, you can deduct up to $3,000 of net capital losses against ordinary income each year. Just watch out for the IRS wash sale rules. A wash sale happens if you sell an investment at a loss and then buy the same or a substantially identical investment within 30 days before or after. If that happens, the IRS won't let you claim that loss right away. Now, dividends are something you'll want to be aware of because all dividends count towards MAGI. Qualified, non-qualified, doesn't matter. So if you're trying to stay under a certain subsidy threshold, you might lean towards funds that don't throw off a lot of distributions. There are also reduction levers you can use. Things like contributing to an HSA, a deductible IRA, a SEP IRA, or solo 401k if you're self-employed, and even the self-employed health insurance deduction. All of these lower your AGI and therefore your MAGI. With Roth accounts, here's the key difference. Roth conversions increase your MAGI by the taxable amount, so you want to time those carefully if you're targeting subsidies. But if you're taking qualified Roth withdrawals, meaning you're at least 59 and a half and your Roth has been open for 5 years or more, those do not hit AGI or MAGI. That makes them a great tool for pulling in extra cash without jeopardizing subsidies. So that's it. Hopefully, by listening to this podcast, you now know how to calculate your MAGI for ACA purposes, and not only that, have a lot of great ideas of how you can manage it in early retirement to get subsidies and cost-sharing reductions, as well as a heads up about 2026. And don't forget to download the free Excel template you can use to calculate your MAGI and apply what you've learned in this podcast. There is a link to it in the description or show notes. And if you're serious about early retirement, download my free 12 must-do steps to retire sooner and smarter. It's a checklist that offers a quick, practical guide to retiring early. And there's a link to it in the description or show notes. And lastly, don't forget to follow this podcast and leave a review if you found this podcast helpful. And when you're not on the go, Early Retirement Roadmap is available on YouTube. And go to mikeupland.com for all of my media in one place. Thanks for listening, and until next time, this is Mike Upland, early retiree, last year at the age of 55. Take care and make the most of today.